What's up, guys? Igor Hernandez here. I'm one of the attorneys at Cornish, Hernandez and Gonzalez, where I practice injury law and first-party homeowner property claims. And today I want to talk to you about something called bad faith. And it is something that Florida has. It is something that many states in the United States have. But it's something that is every year basically getting diminished, and every year is going away little by little. And it's something that's unfortunate that is happening, because it's probably one of the very few things standing in the way of insurance companies not paying any claims at all to begin with. So what is bad faith? It goes back probably over 200 years, if not more. And what it is at some point, it became clear that insurance companies needed an incentive to pay the claims. What I mean by that is, so you have a contract with your insurance company, and the insurance company policy, the contract that you have says, well, if you get into a car accident and it's not your fault, we will cover all your medical expenses and your injury, basically your pain and suffering, etc. Basically what a typical uninsured / underinsured motorist policy would say. Okay, you have that contract, you're paying that premium, you pay that premium for a long time, and then one day an unfortunate event happens and you are injured. And it's time for your insurance company to step in and meet its end of the bargain. So you've complied with your end of the bargain for 20 years by paying the premium without fail. Now, 21 years later, it's time for the insurance company to do their part to pay for your injuries. And so you submit your claim to them, and they say, you know what, we're not paying. We think you were at fault. We think that the medical bills are unreasonable. We think that whatever, we're just not paying. What are you gonna do about it, right? Before bad faith, what would happen is that the person who had the policy now had to hire a lawyer and sue the insurance company. And it was a bad situation to be in, because if the person won the lawsuit, then what they would get is what they're entitled to. So basically what they've been paying for the last 21 years to get, and now the insurance company has breached its end of the bargain. Now that the person has to go to litigation, potentially try a case, potentially spend a whole bunch of money, potentially pay a lawyer fee, and then at the end of that, instead of, let's say the policy was $100,000 in uninsured motorist benefits. At the end of that litigation, let's say he wins, the injured person wins and gets a $100,000 judgment, right? Well, now out of that $100,000 judgment, he's got to pay lawyer fees, he's got to pay the court costs. He's 2 years deep, so he doesn't have the use value of that money for 2 years, because the insurance company did not feel like paying on the policy. And so they're in a position where they're getting basically probably less than half of whatever they had been paying on for the last 21 years. So whatever they've been bargained for over the last 21 years, they're getting less than half, let's say, or half. So obviously that's not a good situation, because that's an incentive for insurance companies to not pay the claims. That's an incentive for them to be like, okay, cool, we'll fight all of them. If we win, then we don't have to pay you anything. If we lose, we have to pay you what we would have had to pay you anyway to begin with. There's no downside. There's no negative aspect of us not paying any claims. And so obviously that's a huge problem. So we realized that was a huge problem many, many years ago. And we decided that we needed to do something. And when I say we, I mean we as a community decided that laws needed to be put in place to change that, to incentivize the insurance companies to do the right thing. And so those laws are what we call bad faith laws, which means in a scenario like that, if the insurance company should have settled that claim, should have paid out the benefits, but decided not to, when liability was reasonably clear, when basically they knew they had to, or a reasonable insurer would have known that it had to, and you go and sue them, and you go to trial. Let's say your policy was $100,000, but you go to trial and your jury awards $3 million. Well, the bad faith laws say that, okay, if the jury awarded $3 million, it doesn't matter that the policy was only $100,000. Basically, it doesn't matter that what was contracted for was only $100,000, because what was contracted for is no longer at play. What was contracted for is something that was at play in the beginning, when you, the insurance company, had a responsibility to do the right thing. And you did not do the right thing. Because you did not do the right thing, now you have to eat the judgment. Now you have to pay out on the total amount of the loss, not the contracted amount. And that's a great thing, because what that does is it incentivizes insurance companies to understand the risk and pay out in claims that they should pay out. Now, even with the bad faith laws that we have. Even with those laws, insurance companies still do not do the right thing all the time, or most of the time even. But it's a great, great incentive, because without that, they would literally never do the right thing ever, because the business model would not make sense. It would not make sense to do the right thing when you could choose to fight every single claim, not pay any of them. And if you go try to lose, the worst thing that can happen is you got to pay out the thing that you were supposed to pay out to begin with. So without bad faith laws, the insurance companies would never pay anything. Thankfully, we have them, and it's a great thing to incentivize insurance companies to pay. Now, the bad news is that every year in Florida and in a lot of states across the nation, the lobbyists for insurance companies, the insurance lobby, which has tons and tons of money, I'm talking billions of dollars, they lobby the legislatures to change the law. And every year they're trying to chip away at the bad faith requirements. Every year they're trying to make it harder to claim bad faith, which another way of saying that is to try to make it easier for them to not pay on policies when they should, and not be hit with the downside, not have to eat the judgment if they in fact committed bad faith. So that's unfortunate. That's something that we're dealing with here in Florida. We're dealing with in many other states, and it's not going anywhere. It's going to be something that we will continue to deal with because of the nature of how business is conducted as far as legislating, making laws and things like that, and the amount of money that's at play when you're dealing with insurance companies. So anyway, guys, that is it for now. I will catch you again next time.